Hello, traders. Welcome to today's class. Today we won't be wasting our time. We'll be talking about how to identify support and resistance zones, key support and resistance zones on charts. Okay, so I see a lot of people they make so much mistakes. Some of them will just stay on the 30 minutes time frame to identify support and resistance zones. I tell you, you're doing it all wrong. Okay, so this is how we identify a support and resistance, key support and resistance zones, not just support and resistance zones, key support and resistance zones. This is how we identify them. Okay, so we move to daily time frame. First of all, you move to weekly time frame. When you open your chart, the first thing you need to look out for is the market direction. So we move to weekly time frame. That's if you're trading binary. But if you're trading um, currency pairs, you move to monthly. Start from monthly time frame. But here, since we don't have enough data, enough history for us to know what's happening, what I mean history for us to see some market ranging behind before understand. So we don't have enough data for us to market data for us to know what the market is really doing. But the only thing we can see it's an uptrend. Okay, so you start from weekly. If you are trading boom, crash, and volatility index. Okay, but if you're trading currency, you can move to a monthly time frame to see what the market is doing. But here, since here we at least we have few data trading history, so we stay here and make and confirm the market's direction. Is it an uptrend or a downtrend? How do you do that? The first thing you need to do is to bring your tool, trend line tool. You can see that's an uptrend. If you want to place it from here, you can see the market is going up, up, right? The market is going up. Okay, so that's it. The market is going up. It's an uptrend. Knowing the market direction helps you know if you are buying. Okay, helps you know that this particular pair it should be buying. Spikes will be coming. Spikes will be coming because the direction, overall direction is up. So if market should go against you somehow, you have the confidence that markets will certainly go your direction since you are buying and the market's direction is up. Okay, the overall direction is up. So if you are buying, if you are buying, this is boom 1000. So if you are buying boom 1000 and it's going against you with few pips, you know certainly it will get to your direction because it's an uptrend. Okay, but if you're selling boom 1000 and it's going against you, um trust me, very rare if it comes back to your direction before you win such trades. Okay, so that's the beauty of knowing the market's direction, overall market direction. So first thing we do, we bring this tool. We know the market direction. So the first thing you do when you open a chart, you try to know the market's direction, where the market is going. You can see it's an uptrend. It's an uptrend. Okay, it's an uptrend. So after knowing the market direction, the next thing you need to do, let's put this off. So it's an uptrend, so we know we should be buying. If you are selling this pair, we shouldn't stay long on it. Maybe we've seen a particular catalyst that convinces us that okay, markets will go down for a bit, for a while bit. If you are buying, we are sure of making good profits. Okay, so we move down to daily time frame. When you move down to daily time frame, note what you need to do, what you're doing on the daily time frame is to also know the market direction. After knowing the market direction, you can see the direction is clear enough. It's still an uptrend. That's an uptrend. Then after knowing the direction, what you need to do next to identify identify key support and resistance zone by using your horizontal tools. Okay, so this is what we do on the daily time frame. Okay, let me make this clear. If you know how to identify zone you are about, if you can identify key zones perfectly, you're about 45% good. Should I say 35% good as a trader? Yes, if you can identify key levels in the market, you're about becoming a successful trader. Okay, but it's really hard for some people to identify this key and support and resistance zones, key levels on the chart. Okay, so what we are doing today is to tell you how to show you how to easily identify those key levels. Okay, so zones are where markets reverses several times, market reverses at that level several times. That's a zone. Zone is an area on the chart, something like this. Let's place it. Zone is an area on the chart where market reverses, but it's not a point, a particular point where market must, once market gets to that level, it will reverse. Okay, so you can see here when I say zone is an area, you can see this market, you see this level, you see market didn't touch the line properly, but here market touched this line. You can see here market even the price went above this resistance line before it went back in. Okay, so you can see this again, market, this line was broken. So it's a zone is an area on charts. It's not a point, a particular point. It's just an area on the chart. Okay, so and you make decisions. You buy or sell on zones. You buy or sell on key zones. This is key zone. You buy or sell on key zones. Okay, now this is what happens. For you to identify support and resistance zone is not easy, especially for those that are just coming into the market newly. It's not very easy, but I'll make it easy for you. Okay, you can see here, you can see we have zones scattered. We don't even know where to place our zone. So what we need to do is for us to switch from candlestick charts to line charts. Why? Because you can see on candlestick charts we have a lot of, the noise is much on candlesticks. The noise is much, like the wicks you're seeing here, the shadows you're having here. So the noise is much. You have noise. So for you to filter this noise, what you need to do is for you to switch from candlestick pattern to line, candlestick chart to line chart. Okay, this is our line chart. Okay, now you can see line charts will have only the opening and the closing price of every candlestick. This is the opening and the closing price. Okay, so let's check on candlestick. So candlestick, this is the opening. For bullish candlestick, sorry, for bullish candlestick, this is the opening price, this is the opening price, and this is the closing price here. Then for bearish candlestick, here's the opening price, sorry, yeah, bearish candlestick, this is the red line, this red candle, this is the bearish candlestick. Okay, on the bearish, this is the opening price up here, and this is the closing price. Okay, so on candlestick chart we have lot of shadows. These wicks, these tiny wicks you're seeing here, we have a lot of shadows. These shadows cause this what causes the noise. on charts. So if you switch it to line charts, you will not have those um wicks again, those shadows again. It's you have only the opening and closing price, opening and closing prices. Okay, so what you do now, when we stay here, you see it's a bit easier for us to identify support and resistance zone. Why? Because let me show you how to do that. Bring this line down, you realize that we have, oh sorry, bring the line down here, you will realize that we have some touches here. We have one here, we have here, we have here, we have here, 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 some places, right? That shows that that level, since this is a daily time frame, that level is strong enough to reverse market, for market to spike this boom 1000. When if you're trading boom, once market gets to that level, it spikes. Okay, so this has really helped us. But if we move to candlestick pattern, it will be hard for us, very difficult for us to see what is happening. Okay, but the line charts helps us see, filter the noise, and make it a bit easier for us to identify those levels. The same thing here, so we can do like this, like that. Now look at that. You see we have touch here, we have here, sorry, we have here, we have here, 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 here. Go back, you see we have touches there. Okay, that makes it a very strong level. Okay, you see the beauty of line charts. Then you look closer again, you see there is another level here. With the help of the line charts, we'll be able to identify two strong levels here. Yeah, you can see the touch here. You see those touches there. So this is how I do. This is how I used to do. I'll bring this tool, bring it here, and look for where I can identify my zone, where my zone can be, where it could be. Okay, yeah, you can see there, that's a zone. That's a zone. You can see those touches. You see here, 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 here. So that's a zone. Market touch from up and down. That place is a support, served as a support and a resistance zone. So that makes it a strong level. Since this is a daily time frame, so we bring in our horizontal tool and place there. Okay, so that's how to identify those zones, key levels easily. That's how to identify key levels easily. Now we move to where we have the current price. We bring this down. You see here, this is a zone. Okay, this is a zone. You can see the touches. See here, here, here. So that's a zone. So what we do, we bring our tool, place it there, and look carefully again. You can see another zone as easy as that. There's another zone. You see those touches of your touches. Bring another one here. You can see. So you can see, it's that easy to identify zone. I told you guys I'll make it easier for you guys to know how to identify those key levels. As easy as that. Okay, so you can see the beauty now. You see those touches. See market touching here, touch here, 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 here. All those places we have touches all those places, all those levels we have touches at all those levels. So that makes it a strong level. Okay, what we are doing next is um yeah, what we are doing next is we move down after identifying those key levels on the daily time frame. Try not to map all levels at your key levels. You don't pick all the zones you see as your support, key support, and resistance levels. Why? Because you might map minor zones. Minor zones are the ones you will identify, easily identify on for 1 hour time frame, 30 minutes time frame, or 15 minutes time frame. Okay, those ones, or those levels are minor levels of which are not advisable to trade on those levels. Okay, you can only take profits when market gets to that such level, on minor level. So let me show you a minor level. Okay, for example, here, a place like this, you cannot place your zone. You cannot bring another zone here. You see, there's another market structure here. There's a market structure here. There's another here. If you go back here, you have a market structure here. Go back here, we have it here. So you can place a zone here. Let's check. If you place a zone here, you see it will not be beautiful, and we have so many zones, and it will be so hard for us to trade. If you have zone here, it's so hard for us to see opportunity, trading opportunity. So we avoid placing plenty zones to have many zones on your charts. For you to have to have good results, you need to avoid opening having plenty zones on your charts. Okay, so now after identifying these zones on your daily time frame, what you need to do next is move down to 4 hour time frame. 4 hours time frame, H4. These are H4. So when you move to H4, what you need to do is place them properly, because there are some spaces you couldn't see when placing them on the daily time frame. You can see our this is accurate enough. Our zones are accurate enough. Okay, very easy. You can see what happened here. So those levels, what happened there. See, market cut to this level, boom, cut to this level, boom. The same thing here, same thing here. You see here, here. Okay, there's no how market gets to a strong level like that it will not spike up for you to make a profit. You see the same thing here. You see this thing here. So markets, like I said, is an area, not a point where market. So it might market sorry, zone. It's an area on charts. It's not a turning point where market turn at all times. It's just a zone of which it's an area of which markets can pass through it and then reverse back, or markets might not even get to that level, like what happened here. Market didn't get to this level, just reverse. So it's an area on the chart. The same thing here, didn't get here, it's just an area. Okay, so you might not be very accurate, might not be very accurate, but it should be close. Markets should get to that level before reversing. So you cannot buy. If markets should get to this level, you cannot buy, you cannot enter boom again. You might not expect much spikes, because it might just get to this area and reverse back, and you lose money. Okay, so now let me show you minor zones. Minor zones here is a minor zone. Maybe if you go to daily 30 minutes time frame. Okay, let's move to 30 minutes time frame. On 30 minutes time frame, you can see here 30 minutes time frame, we have some zones that we couldn't identify on the daily time frame and even 4 hours time frame. So these zones are known as minor zones, of which markets can pass through the zone at any time. Market can break this zone at any time. So for you to make your decision here in the 30 minutes time frame, identify this one as a key, as like this level as a key level is not advisable. You might start losing. It's okay. So your key levels should be the one you would identify on the daily time frame, or sometimes on your 4 hour time frame. But most times I don't like placing zones on my 4 hours time frame. So here the minor zones are where I take my profits. If I should buy from here, I take profits here. But it might reverse, since it reversed the last time and even time before the last time. You see what happened? So I take my profits. If I'm buying here from here to here, I take my profits here. If I'm buying from here, I take my profits here. So that's the beauty to identify key levels. You can see what happened here. We can make so much. We have about 3 signals here already in less than 2 days. 1, 2, 3. We can make so much profits. Okay, so that's it. You move that back. You still see what I'm telling you. You can see spikes even when the market past this level. You can see spikes here, see spikes, and you can still make more profits. Okay, that's the beauty to identify your zones on higher time frame. Okay, so remember, first of all, you know the market's direction. The second thing is for you to move to daily time frame to map your to place your horizontal tools to identify those key levels. Then the third thing is for you to move to 4 hour time frame to make a decision to buy or sell. When you move to H4, you decide either to buy or sell. You can see what happened here. We bought here. Yeah, I entered this. I bought here. I made some profits. I came back again. I bought. I made some profits. Okay, so let's move to the next chart. Let's move to another pair. Let's move to this. Okay, let's move to crash 1000. Yeah, this is crash 1000. Okay, so first thing, remember, move to weekly time frame to know the overall market direction. You can see here the overall market direction is up. It's an uptrend. Okay, so what you do, you place here to tell you, okay, see, it's an uptrend for a very long time now. Since last year, it has been going up. Okay, so it's an uptrend. That tells you if you are selling crash 1000, you shouldn't stay long. After 1 or 2 spikes, you're out of the market. Okay, because since it's an uptrend, the pressure is going up. Like it has the up pressure is higher than um like what I'm trying to say, sellers are stronger than buyers are stronger than sellers here. So if you're selling crash 1000, you don't stay for a long. After first and second spike, you're out. Maybe the first or the second spike, you're out. Okay, because it will surely continue since the pressure is really going up. Okay, so we've identified the market direction. It's an uptrend. So what we do, we move down to 1 hour daily time frame. Daily time frame, we switch to line charts. Yeah, line charts. You can see line charts. It will be clear enough for us to identify those key levels, like what we have here. Yeah, that's a key level. That's a key level. Yes, that's a key level. Yes, this is a key level. Mm, okay, let's do like this. Hmm. That's the key level. Market is going to that direction. Sorry. Market is going to that direction. So what we do, we place it here and wait for market to get to us. Then another here. Okay, we place another here. So just like that, you identify your support and resistance zones. Okay, I think that should be enough for today.